General Motors' reported decision to halt electric motor production and invest heavily in V8 gasoline engines is a strategic pivot that could boost short-term profits from trucks and SUVs, but risks hindering its long-term competitive position. General Motors, a titan of American industry, recently made a strategic decision that has sent ripples through the automotive world. The company is reportedly halting its $300 million investment in electric motor production while simultaneously pouring $888 million into developing a new generation of V8 gasoline engines. This pivot, if true, marks a significant re-evaluation of GM's future trajectory. It raises critical questions about its commitment to electrification and its competitive standing in a rapidly evolving global market. The apparent U-turn from EV ambition to ICE reinforcement. For years, GM had been vocal about its all-electric future. CEO Mary Barra frequently touted ambitious EV production targets and significant investments in battery technology and electric vehicle platforms like Ultium. The reported $300 million allocated for electric motor production was a tangible sign of this commitment. It was aimed at bringing key EV component manufacturing in-house. The sudden shift away from this, coupled with a nearly billion-dollar bet on internal combustion engine, ICE technology, suggests a pragmatic, perhaps even defensive, response to current market realities. The $888 million investment in V8 engines is likely aimed at bolstering its highly profitable truck and SUV segments. These segments remain overwhelmingly powered by gasoline engines. They are crucial for GM's immediate financial health. GM's financial performance has been a mixed bag. While the company has posted strong profits, largely driven by robust sales of high-margin trucks and SUVs in North America, its EV division has faced headwinds. Production ramp-ups for models like the Hummer EV and Cadillac Lyriq have been slower than anticipated. The market for EVs, while growing, has shown signs of cooling in some segments. Higher interest rates are impacting affordability. Traditional ICE vehicles, especially large trucks and SUVs, continue to be cash cows. They subsidize the costly transition to EVs. This reliance on ICE profits likely influenced the decision to double down on a proven revenue stream. GM's short-term gains versus long-term vision. In the short term, this strategic pivot could certainly benefit GM. By focusing on V8 engines, GM can capitalize on strong current demand for its gasoline-powered trucks and SUVs. These vehicles command higher transaction prices and profit margins. This could provide a much-needed boost to immediate revenues and profitability. It would also please shareholders who prioritize current returns. It allows GM to defer some of the massive capital expenditures associated with a full-scale EV transition. This gives the company more breathing room. However, the long-term implications are far more precarious. The global automotive industry is undeniably moving towards electrification. This shift is driven by increasingly stringent emissions regulations, evolving consumer preferences, and the urgent need to address climate change. Major markets like Europe and China are aggressively pushing EV adoption. Even in the US, while the pace might vary, the direction is clear. By de-emphasizing in-house EV motor production and heavily investing in V8s, GM risks falling further behind competitors. These competitors are fully committed to the EV race. This could lead to a loss of market share in future high-growth segments. It could also potentially alienate environmentally conscious consumers. This move undeniably impacts GM's competitive positioning. In the US, Ford, while also navigating the ICE to EV transition, has maintained a strong public commitment to its EV plans. Ford is investing heavily in new battery plants and EV production lines. Tesla remains the dominant force in the pure EV space. Tesla continues to innovate and expand. Internationally, Chinese automakers are rapidly advancing their EV technology and market penetration. European manufacturers are also making significant strides. GM's V8 investment could be seen as a concession to its legacy business. It may signal a lack of confidence in its own EV ramp-up. This could make it harder for GM to compete effectively in markets where EV adoption is accelerating. It could damage GM's brand image as a forward-thinking innovator. While its truck and SUV dominance might hold for a few more years, relying too heavily on a declining technology could leave GM vulnerable. The global automotive landscape is shifting dramatically. Could GM have chosen a different, more beneficial path? A more balanced approach, perhaps? Instead of seemingly abandoning its in-house EV motor plans, GM could have maintained that investment. At the same time, it could have strategically deployed the V8 funds. This would have allowed GM to continue capitalizing on profitable ICE sales in the short term. Simultaneously, it could have accelerated its long-term EV capabilities. Investing in more diverse EV offerings, particularly more affordable models, could have broadened its appeal. It could have captured a larger segment of the nascent EV market. Furthermore, aggressive investment in charging infrastructure or innovative battery technologies could have differentiated GM. That could have cemented its leadership in the EV space. The current strategy risks GM becoming a follower rather than a leader in the electric future. GM's reported decision to pivot from EV motor production to V8 engine investment is a high-stakes gamble. While it may offer a short-term financial reprieve by shoring up its highly profitable truck and SUV segments, it raises serious questions. Specifically, questions about GM's long-term competitive viability. In a world rapidly accelerating towards electrification, this move could leave GM playing catch-up. It could potentially sacrifice future market share and innovation leadership for immediate gains. The true test will be whether this strategic detour allows GM to build a stronger foundation for its electric future.